Hello there, Hector the Bill here. Welcome to a new video. Today we're gonna step a little bit deeper into, support and resistance trading, and more specifically I'm gonna be listing what I call the 10 commandments of support and resistance trading. Okay, these are basic principles that actually is the core of the core rules of support and resistance trading. You need to know by heart these 10 lines here that you are seeing right now on your screen. Actually, they are so important that you may actually want to write them down on a sticker and just just place it next to your monitor. Okay, you stick it next to your monitor, to your trading desk, somewhere where you can always take a quick look and check whether any particular setup that you may have found actually fulfills all these different commandments, all these different rules. All right. Again, this is crucial, guys. This is going to be a long, thick, and dense video, but trust me, it's one of the most important in the whole module. Alright, so again, please do take notes all along. You may want to review it twice, and again, next time you go into your charts and you define different levels of support and resistance, please go through this list just to make sure they actually fulfill, alright, these 10 commandments. Alright, let's get going. Okay, first of all, you need a market bias. This is a universal principle, guys. You cannot make money when price has no clear directional bias, or when it's not really showing any type of color, right? Either to the upside or to the downside. If you are seeing market confusion, meaning price flip-flopping sideways, your best bet is to not take any trade, to not search for trading opportunities. Now, I don't mean to say here that you actually need a full trend, all right? That's not the case. Also, I don't mean to say here that you need to trade in the direction of that market bias. That's not the case either. For example, if you have an uptrend, you have a clear directional bias, in this case to the upside, so you can search for either continuation moves or reversal moves. All right, but at least you can define the chart. Okay, you can structure the chart as an uptrending bias. Okay, it works it works as a work frame, just as a painter needs a canvas, okay, to conduct his or her work. Well, you need some sort of a directional bias in order to search, again, either for continuation or for reversals. In the other hand, let's assume price has been entrapped within two horizontal boundaries. Okay, basically we have a range, and price up on quite a while being zigzagging up and down, flopping sideways. Price is falls back somewhere in the middle area of the range. It's absolutely impossible, guys, trust me here, absolutely impossible in the long run to take sensible trading decisions once price is located in a no man's land, which is actually the second commandment. I'm going to be talking about no man's land in a minute. It's absolutely impossible to make money there, again, because if the market as a collective, okay, as a whole, is not really showing any true color, is not really showing, or it's again showing market confusion, it just doesn't know where it wants to go. If the market doesn't know where it wants to go, how are you, as just an individual trader, how are you going to position yourself in any given direction? All right, you are basically flipping a coin. Okay, it's a 50-50 chance. And again, we don't try to gamble our money away. All right, we trade whenever we find an edge, or we believe we have an edge over the market because we have an extra piece of information, and therefore we can take sensible trading decisions. Well, you cannot take any sensible trading decisions there because you have no edge over the market. However, if price was entrapped within this range, all right, okay, and then price moved all the way up to one of the extreme boundaries of that range, there you have an edge over the market. How is that? Because price is located at a decision-taking level. You know that price is bound to react off that level. Again, either for a reversal or for a breakout move, but at least you know that price is bound to go somewhere from this point. Okay, the move should be imminent, and it should happen in momentum, because this is a decision taking level. This is not here. If price is not anywhere now on a no man's land, guys, in the middle of a range, is price at this point is at a decision taking level, and therefore you can begin searching for trading opportunities, either again reversals or breakout, but at least you know that the move is going to be imminent and it's going to happen fast, all right, in momentum. You don't have that extra piece of information here, and that's why I say that you cannot gain any edge over the market there. You can indeed there. That's a correct, that's a, let's say, an appropriate area to search for trades. All right. So as you can see, whenever I mean that you need a market bias, I don't mean that you need, I don't mean to say that you actually need a trend. You can be entrapped within a, price can be entrapped within a range, all right? But at least you have that market bias. You know that the move is about to happen, and it's about to happen in one directional bias. Not like in here. Not like in here. In here, price can keep on move sideways, on and on and on. In here, that's not going to happen, because price is at a decision taking level, and the market needs to position itself into one given direction very soon. All right, that's what I said. That's what I mean by having a market bias. And well, this pretty much links to the next commandment, which I already mentioned before: avoid trading in no man's lands. What is a no man's land? Well, it's an area that's facing resistance above, immediately above, and support immediately below. Basically, it's a congested area. I usually picture, and that's also linking with the next commandment, I always picture a chart as a highway. All right, you can have highways totally congested, loaded with traffic, or highways completely free of any traffic. Now, let's assume levels of support and resistance are, represent the traffic jam. All right. If you are driving in a highway with plenty of cars around, with plenty of levels of horizontal or diagonal levels of support and resistance, both above current market price and below current market price, it's just a pain to drive or to trade in those charts. Okay, you don't want to trade in those market conditions, just as you don't want to drive on heavily congested highways. Okay, you want to search for areas free of traffic. Well, a no man's land is an area of the chart where you see, let's assume, I don't know, price is somewhere in there, and you have plenty of levels of resistance above and plenty of levels of support immediately below current market price. That's a no man's land. It's a level where price is basically located in areas where the upcoming next move is rather confusing. You are not pretty much sure where price might be headed on the upcoming future, and therefore, again, you don't have a market bias. Now, let me give you a few examples on actual charts. Right, let me show you a typical example of a no man's land. Okay, I was just analyzing the New Zealand dollar against the Swiss franc on the weekly chart, and well, take a look at what's going on as of lately. Let's draw some lines, some levels of support and resistance on this particular chart. First of all, let me zoom out a little bit. Let's see what we can find here. Alright, well, first of all, we can find a trend line that was broken a long time ago, so we can delete that as well. Now, let me zoom back in a little bit. Okay, we also had, or used to have, an uptrend there that also got broken. As you can see, now we have the new outer trend line should be that one, but I cannot really draw it, or I cannot really, this is not really a significant trend line because price is still not made a new high there. All right, so while I can draw that trend line, still price is not really confirmed the continuation of this former move by taking out by making a new high, taking out the previous swing high in that trend. So this outer trend line is a little bit weak. All right. Not only that, price is also, playing, toying around, bouncing around that trend line for the time being. So, no clear reading there. Also, if we draw some horizontal lines, as we mentioned already before, price is unable to break above that particular level. All right. So all in all, what do we have? Let me take this off just to make it cleaner and zoom in a little bit more. So what do we have? Take a look at the swings in price. Lower swing high there, price making a lower swing high after having been scoring higher swing highs, higher swing lows, higher swing highs. Well, now it makes a lower swing high and a lower swing low. But then it comes back all the way up and it takes above that level, but it fails to, continue with the trend. So all in all, we have price simply zigzagging up and down without any clear directional bias. And as I was mentioning before, we have that outer trend line there, a little bit of, of a weak trend line, but a trend line nonetheless. And also we have resistance above current market price with that final swing high there. All right. So all in all, what do we have? Price is in a no man's land. At this point of the chart, at this junction, there is no clear market bias. Okay, there is plenty of traffic in this highway, plenty of traffic there with, again, resistance above current market price, support below current market price. We also have support on this previous swing low there. Price is in the middle of that swing high and that swing low, and again with very confusing zigzagging formation, basically moving sideways. Okay, as you can see, price has been moving sideways for quite a while, simply up and down, up and down, up and down, etc., etc., just to end up at where it was before. All right, entrapped in horizontal levels of support and resistance, that trend line we saw before. All in all, plenty of traffic here. You don't want to trade in that market conditions. So, course of action, just mark the swing high, mark the swing low, and until price gives way, all right, into either direction, you don't want to trade here. Just check this out. Let me zoom out once again. Remember when I said before you want to drive in, highways free of any congestion, okay? Or meaning you want to try it in charts where there is no, there is no jam or plenty of levels of support and resistance flying around both above and below current market price. Well, if we wait for price to actually break, whoops, sorry about that. Just let me be accurate with my trend lines. You don't want to be sloppy with your trend line, guys. You want to be rather accurate with them. All right. So, all right. Once price, check this out. Once price actually gives way in any given direction out of this or away from this no man's land, do you see how there is no further level of support or resistance anywhere in there? All right. Once price actually gives way in any given direction, we have plenty of free room both above and below that congestion area, so we can certainly search for our trades here or here. These are the areas where you want to search for trades. All right? These are the areas. As you can see, there is nothing above and nothing below. So once price breaks above that level, chances are it will cruise through, it will cruise forward, since there is no further, let's assume a breakout to the downside, there is no further level of support anywhere below that may stop price, stop price on its tracks. Since there is no support level, price, whenever the breakout takes place, it will fall freely in momentum. All right, and the same thing to the upside. That's the type of market scenario you want to trade. Trade in areas free of any traffic. Avoid areas with heavy traffic going on in there. Okay. All right. Let me give you another example. Canadian dollar against the Swiss franc, weekly time frame. current market price, right there. Let me zoom out a little bit. As we can see, we used to have a downtrend. Oops, sorry about that. A downtrend in there, but it's obviously been broken. It's been broken for quite a while. We also have a level of support and a level of resistance there. That level of resistance is quite far away from price, so no need to draw that. And this level of support, well, has been broken quite a number of times, so it's not significant anymore. You need to remember that the markets have short memory span. If a level of support and resistance has been broken twice in a row, most of the traders simply take it out of their respective charts, and therefore it's significant no more. We have one final level of support and resistance down there, but as you can see, plenty of room. Price is way far away from those levels, so no need to draw them for the time being. Now let's zoom in a little bit more. We used to have a trend line there, but also got broken and broken once again, so we should take that off. We have an outer trend line there, but as you can see, price has not taken out the previous swing high in this trend, so the trend is so far in a halt. Okay, the trend is more or less sitting on standby, so to speak, and therefore this trend line is not really that strong. Okay, and well, price right now, we can see how the market, the price action reading is actually a little bit confusing. We have that former swing high, and then we scored a lower swing low, and then a lower swing high, and then a higher swing high. Price forming some sort of a double bottom there. In price finding again resistance of this area, more or less, okay, coming back down, and all in all, we don't really have any bias here. Okay, it's a rather confusing price action. Price not really moving away from this area. Once we actually wait for price to break away from this congestion area, then we will be able to have some area free of traffic. All right, both above the range and below the range, there is not really any traffic going on in there. Okay, but as long as price remains in this area, right, especially in this middle part of the range, it's just best to not search for any trading opportunity at all. Okay. One final example, sterling pound against the Japanese yen, also weekly time frame. I'm gonna conduct this exercise very quickly here. I zoom out, well, let me zoom out a little bit more. That's the beginning of the trend there. Well, obviously we can define an outer trend line in this downtrending price action. Okay. We here do have a bias from a long-term perspective. Please mind that I am zooming out my charts quite a lot. All right, level of resistance in there, price far away from there, so I will not mark it. Level of support in there, let me mark it with a horizontal line. There we are. Now we also have a level of support with this double top just above current market price. Okay, those are in this last swing. All right, these are the extremes of the swing. Okay, if price breaks out to the upside, this downtrending price action will be over. If price now keeps on pushing to the downside, well, this should be our next level of reference. Okay. Now, however, if I zoom in, I can see how price, as of lately, has kind of been moving sideways within a no man's land. All right, no clear price action reading as of lately, as of the last, let's say, 20 bars. All right, price simply flapping sideways. Moreover, again, we had an up channel there, probably the retracement of this. Let me zoom out once again. The retracement of this last swing. Okay, but then it kind of failed to keep on pushing to the downside. All right, instead we had the retracement, and then price simply flapped sideways for quite a while. So we can define our no man's land in there. All right, no man's lands in there. I like to see a breakout here to the downside. Why is that? Because if we break to the upside, we will be facing resistance rather soon. Okay, so yeah, maybe we do have some pips here. I mean, some free room here to score a a profitable trade in there, which we may have, but I would like to see a breakout to the downside. Not only we have more free room here, okay, there's certainly less traffic in here to the downside than to the upside, but also, again, zooming out, we can see how the overall bias in this price pattern, in this chart, in this market, is obviously to the downside. Okay, price has been zigzagging to the downside, and therefore the bias is south. Okay, is to the downside. So if we mark our congestion area there, what I would certainly like to see is that breakout to the downside. Also, if we break to the upside, we will be facing that outer resistance. Okay, that outer trend line. All right, so I would be very, very, very hesitant to trade any breakout to the upside. If I was to trade or to search for long opportunities on this particular currency pair, it would be if I get a breakout of this level, also a breakout of that outer trend line. Why is that? Because here we have no traffic whatsoever. Do you guys see that? No traffic. The next level of resistance is this former level of support there. All right, there, but plenty of room here to score profitable trades. Okay, so my idea here, either breakout of this level here up there to search for trades in this area completely free of any traffic. Do you see how there is no level of resistance anywhere? All right, the trend line comes in there. Once it gives way along with that swing high, there is absolutely no traffic whatsoever in there. Same thing here, get a breakout to the downside, no traffic in this area. That's a beautiful area to search for short opportunities. As long as price isn't trapped within this area, that's a no man's land. That's not where I want to trade. Okay? Okay, now let's move on with the presentation. Now that these three commandments are rather clear, we need a market bias, and we should avoid no man's lands in order to trade in areas free of traffic. Okay, next point, buy off support and sell off resistance. This is like the top most important thing as far as support and resistance trading, meaning whenever you find levels of support and resistance, let's assume for example a level of support, okay, price having broken a level of resistance, once it comes back to retest that level, well, you want to be searching for buy opportunities of that area, okay, buy price patterns in order to go along on that particular currency pair. All right, same thing the other way around. If you have a level of support, of resistance, I don't know, let's assume price has been uptrending, okay, finds resistance of that level. Once it comes back to retest that level, unless you get a breakout, okay, unless you get a breakout and then a retest, and then you would be effectively buying off support. Unless you get that breakout, what you want to search until that breakout actually happens, you want to be searching for short opportunities, because you would be trading against, you would be selling off resistance. All right, remember, buy off support, sell off resistance. And conversely, the opposite holds true as well. You don't want to sell against support, and you don't want to buy against resistance. If you have a level of support there, all right, a major level of support in there, price is somewhere in there, and you get some sort of a sell opportunity at that point where support is nearby, you don't want to take that sell signal, because you would be selling against support. You don't want to do that, guys. You want to buy of support. You don't want to sell against support. Okay, same thing, resistance, price being just below resistance, you get a buy signal as per the price patterns we will see on a future video. You don't want to take that buy order, all right, because you will be effectively buying against support, and you never know. I mean, price might indeed find resistance of that level. Once again, you get a reversal, your stop loss gets knocked out. That's not a good idea. You don't want to search for buy opportunities until price gives us a breakout. All right. Let me give you a fantastic example that's actually happening right now on the euro against the Canadian dollar weekly time frame. All right. So we can see right there, we see a no man's land. All right. Price being moving within this congestion area, which in fact has the shape of some sort of a triangle, okay, a leaning triangle to the downside, with price bottoming out at that level, maybe waiting, and maybe we would be waiting for a breakout in order to search for short opportunities. However, if we zoom out a little bit more, we can see how price has actually, given us a support point, a swing point in there, all right? This being the previous support level. Whoops, let me just be accurate with my trend lines there, guys. All right, with that double bottom there, that was the leaning triangle, that I was mentioning before. Unless you have plenty of pips here to search for potential short opportunities there, all right? Otherwise, it might not be a good idea to search or to find any or to trigger any short opportunity you may get up on that breakout if you have a further level of support immediately below entry price. Right? Assuming we get a short opportunity there, do we really want to take that short opportunity knowing that, well, shortly after we are gonna hit another support level? And in fact, take a look at what's going on here. Price is already finding support. Do you guys see that? Price is already finding support and already bouncing off that level. That's precisely why you always want to take a quick look into the longer time frames, or to simply zoom out into your charts just to verify that you are not going to find traffic. Remember, traffic, further levels of support and resistance ahead of your entry. Once this level gives way, the next significant level is down here. Here we have plenty of room to search for trades. However, here, well, it would be a tough call because we have further support levels, and remember, you don't want to sell against support, you don't want to sell against resistance. Another prime example, euro against Australian dollar, weekly time frame. Nice downtrending scenario, isn't it? We do have a market bias there. However, in here, price entered a period of another no man's land, where price has found double support in there, with that swing point there and that swing point there. Maybe we see it better on the daily time frame. Let me scroll forward. All right, that's the double swing point. So we would be tempted to, okay, that's also finding resistance in there, so we would mark that level. And if we get a breakout to the upside, we will search for long opportunities. If we get a breakout to the downside, which is what eventually happened, we would search for short opportunities in there. However, now let's zoom into the weekly time frame, actually the monthly time frame. Do you see what do we have just below that breakout point? Check this out, guys. Massive level, all right, a massive level of continuous support around the 156 area. All right, support, multiple bars bottoming out at that exact level. If you get a short opportunity there, well, I guess it all depends on whether you have enough room to search for that short entry, but again, please mind that you would be trading against traffic, okay? You would be selling against long-term support. Not a good idea. In fact, see how price touched that level, all right? Touched that level there, and now it's retracing back up. We may see that better on the weekly time frame. You see? Touched that level, and now it's come back up quite a bit, all right? So again, always take a quick look into the longer time frames. Whenever you find a trading opportunity, let's assume you find a trading opportunity on the daily or the weekly time frame, always zoom out into the monthly time frame, just to confirm that you are not about to sell against long-term support or buy against long-term resistance. This is going to keep you away from troubles a number of times. Okay, sometimes you find a profitable trading opportunity, or what it seems to be a valid trading opportunity, but then once you zoom out into the longer time frames, such as in this case, well, you see, hey, careful here, I'm about to buy against long-term support. Course of action, obviously, what you want to do is to wait for price to actually break through, and then here is where you can search for your short opportunities. Free traffic here, guys. I mean, no traffic whatsoever, okay? The chart is clean, below that particular level. There is nothing here to stop price. Once the breakout takes place, there is nothing to stop price to plummet below, and that's where you want to search for your short opportunities. And well, that links with the next point in the presentation. The longer time frames or levels of support and resistance on the longer time frames are always more significant than those on the shorter time frames. All right, that means that if you get a signal on a shorter time frame, and then when by zooming out in your charts, you realize that that signal contradicts the outlook you see on the longer time frames, you are usually better off not taking that trading opportunity. In my experience, whenever two contradictory signals clash onto each other, one coming from the longer time frames and the other one from the shorter time frames, about 70% of the time the longer time frame prevails. Okay, that means that by just avoiding taking trades that contradict the longer time frames, your win-loss ratio in the long run, all right, your win-loss ratio will benefit from this very single principle. All right. So going back into the previous example, if you remember, we saw a breakout to the downside on the weekly time frame, but then we took a quick look into the monthly time frame, and we saw that just below that breakout point we had a massive level of support on that monthly time frame. All right. So since the longer time frames are more significant than the shorter time frames, and you do not want to favor that shorter time frame against the longer time frames, well, obviously that's a trading opportunity you want to pass on. All right. So here's my advice, guys, to wrap it up a little bit. Whenever you find a trading opportunity, always zoom out in your charts. Okay, that's gonna take just 10 seconds. It doesn't take more than 10 seconds. Okay, so whenever you find a trading opportunity, zoom out into your charts, zoom out into the longer time frames, and confirm that you are not about to sell against support or buy against resistance. Again, you want to sell off resistance, you want to buy off support, not the other way around. This time, in this particular case example we saw 2 minutes ago, we got a sell opportunity that was facing long-term support. You don't want to sell against support, especially you don't want to sell against long-term support. All right, again, this very single principle will increase your win-loss ratio in the long term by up to 20%. All right, so please always, before pulling the trigger, just take a quick look into the longer time frames and confirm you are not about to get into troubles. Okay, I'm gonna keep the next point very short and sweet because it's very easy to understand. Pick the right time frame, guys. That means that you are to search for trading opportunities, meaning you are to search for the price patterns we are about to see on a future video. You should be trading or searching for those price patterns on the same time frame where you draw your key levels of support and resistance. For example, if you spot on the monthly time frame, you spot a key level of support and resistance, let's assume a previous swing low. All right, a previous swing low there, and well, next time price comes to retest that level, or even if it breaks below that level, and then price comes back to retest that level from below, well, at that junction of the chart, that's where you search for our trading opportunities, correct? For the price patterns that we will see on that next video. Well, you are to search for those price patterns also on the monthly time frame. You don't want to be zooming into the shorter time frame. Some people make the mistake of zooming, into the daily time frame, for example, right there once price hits that level, to how would I say this? To sharpen up their entry point. All right. And as much as possible. Well, that's a mistake. The reason for that is because whatever happens on the daily time frame is just too short of a time frame to be significant to whatever is going on the monthly time frame. If this level of support or resistance, if is or belongs to the monthly time frame, then the trading opportunity should belong to the monthly time frame as well. If you zoom into the daily time frame, you're gonna get too many fake trading opportunities, too many of them. All right, because again, you are micromanaging your trade. That's like zooming into atomic level, all right? and that's not a good idea, okay? Keep things in perspective, guys. If the trading opportunity, if the frame of that trading opportunity, meaning the map, the mapping line, the milestones, the levels of support and resistance belong to the monthly time frame, the trading opportunity itself should also belong to the monthly time frame. Okay, so obviously, conversely, if the trading opportunity, if the level of the trend line, the horizontal level of support and resistance, the range boundaries, whatever it may be, belongs to the daily time frame, you are to stick to the daily time frame as far as spotting the price pattern as well. All right. Okay, next one up, the sharper the level of support and resistance, the better. On a previous video, I was mentioning that sometimes those key levels of support and resistance are not actually levels, but rather areas. All right, rather areas. How is that? Because sometimes price doesn't quite always, let's assume, a triple top. Okay, price doesn't quite always. The markets are not perfect, and you cannot align the triple top in at one specific level, meaning with one single horizontal line. In fact, sometimes you get some sort of, something like that, where price is not quite topping out at exactly the same level, but at any rate is indeed topping out at one specific area. Well, while that's ultimately true, all right, while sometimes we cannot define one specific level as support and resistance, but rather an area as a whole, well, the sharper that area, right, the sharper that level of support and resistance, the better. And that's because of something that we already talked about on a previous video. The markets are made up by people, all right, and the reason as of why levels of support and resistance are actually significant is because those people are locating their trading volume, their trading tickets, right, their trading orders around that area. All right, so if we have one specific level, very accurate, very sharp level of support and resistance, well, all the traders around the world will mark that specific level, and therefore they will locate their trading orders either for bounces or breakouts. Well, they will locate their orders more or less pretty accurately, pretty tightly, so to speak, around that specific level. However, if instead of one specific level what we have is a wide area, well, those trading orders will be located or will be spread out around, or within that area. They are not going to be located around one specific level, but rather, you could see those orders, spanning for a 50 pip range, all right, depending on how wide that particular area is. But again, the sharper, the better. And the better, it is indeed better, because the consequent move, once price hits and reacts off that level, again, either the bounce or the breakout, the consequent move is going to be much more violent or driven in momentum if the area is sharper. Again, because all those orders are going to be triggered at once, and therefore the market reaction, it's going to be massively quick. However, if those orders are spread out, again, in a 40, 50 pip range, 30 pip range, whatever wide it may be, then those orders are not going to be triggered at the same time, right? No, they won't be triggered at the same time, and therefore price will indeed react off that area, but not as in as much as momentum. Okay, so it's always much better to any trading opportunity you may find around a sharp level of support and resistance. It's going to carry a higher degree of quality as a trading signal, and therefore the market reaction, the win-loss ratio you're going to get on that signal is going to be higher than if you are trading off a wide area of support and resistance. Okay, always keep in mind that the sharper the level of support and resistance, the better. Again, let's go back to a previous example that I showed you guys a few minutes ago. Remember this setup on the Canadian dollar against the Swiss franc? Do you see how price is not lining up at the exact same level? All right, it's more or less of an area, all right, of resistance. This one there, that one there, that one there, that one there. Well, we have some sort of an area of resistance there. Next time price comes to retest this area, we are not going to be able to specify right to the pip where we want to search for our consequent trading pattern in order to trigger our entry. It's going to be a wide area. And again, any trading signal we may get right off that area, it's just not going to be as cut clean. Okay, it's just not going to have that mint perfect condition, and it's going to be difficult for us to pinpoint the exact entry level. All right. In the other hand, such as, for example, what we are seeing right now on the euro against the Japanese yen weekly time frame, do you see how we can really nail down the range boundaries right to the pip? Okay, once, twice, 3 times, 4 times there, once, twice, 3 times there. Do you see how all the different highs and lows can be defined with a rather sharp straight line? That's the ideal situation here, guys. Why? Let me actually mark that with an actual horizontal line there. All right. You see how they touch right to the pip, all right? Right to the pip. So now that we are getting the breakout, this is going to be an ideal location to search for trading opportunities, because we can really nail down the key level of reference, and therefore any trading opportunity we may get right off that area, our entry point is going to be perfectly sharp, okay? Perfectly defined, and as a result, all right, they either if we get now a breakout or a fake breakout and a bounce, which is a setup, a trading pattern that we are going to see on a future video. As I've mentioned over and over and over already, I know about that. I apologize for that. But again, you've got to, we've got to build up on the theoretical knowledge here before we actually get onto the trading patterns themselves. So now, even regardless of whether this breakout pulls through or we get a fake breakout, we'll have to wait for this live bar to close in order to know that. But like I say, whatever trading signal we get right now of this trading pattern is going to be a fantastic, all right, a fantastic high quality trading opportunity. All right, so please, 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 if you find this type of very sharp and very accurate levels of support and resistance, such as in here, all right, do keep an eye on that, guys. Do keep an eye on that, because whatever price reaction you get of such a sharp level is going to be a high, or it may potentially become a high quality trade with a high win-loss ratio. Okay? Okay, next point up, and now we are nearing the end of this presentation. Horizontal levels of support, and this may come as a shock for some of you, horizontal levels of support are more significant than diagonal levels of support and resistance. All right. What does that mean? Well, it means that any trading opportunity you may get of a horizontal level of support, all right, let's, for example, a swing up that comes to retest a former level of support, now it may work as resistance. Well, any type of bounce to the downside that you may get off that level is going to be more significant or a higher quality as a trading setup in itself. All right, it's going to carry a higher degree of win-loss ratio, a lower degree of risk. However you want to put that, you get what I mean. Well, that's going to carry a better chance of success that if that trading opportunity comes from a trend line. Okay, obviously diagonal levels of support and resistance are trend lines. All right, so if you get the trading pattern of a diagonal level, of a horizontal level of resistance, support and resistance, is better than if you get it off a trend line. Okay, The reason for that is again the pretty much the same thing as what we've been talking about over and over throughout the videos. Levels of support and resistance are only significant if a number of traders are locating the same level on their respective charts. The thing is that trend lines are a rather personal thing, all right? They are like perfumes. Not every single person likes the same type of perfume, right? Well, trend lines are pretty much the same thing. If we have a zigzagging price action, all right, something like that, well, some people, such as myself, only draw the outer trend lines. Some others draw also the inner trend lines, okay, linking the beginning of the trend and this inner swing there. Some of the people draw trend lines within the swing, all right, such as here, beginning the trend in there. I mean, trend lines is not as universally accepted. All right, they are not as universally accepted as horizontal levels of support and resistance. If in your chart you have something like this, well, you know where the swing points, the swing turning points are. This one, this one, this one, this one, and this one. All right, there is no discussion about that. All right. However, again, if you have a zigzagging price formation in one given direction, then you can draw multiple trend lines in that trend, okay? And therefore, you never know which one is the one that the majority of the traders have chosen. Most of them only mark the outer trend line, and that's why I personally only mark the outer trend line, okay? Because it's the one most commonly accepted, all right, as a level of support and resistance. However, again, different traders, different trend lines. Levels of horizontal support and resistance are much more universal, easier to spot, and therefore the market reactions you get of a swing low, all right, obviously a major and easily identifiable swing low, well, everyone has marked that particular level on the chart, and therefore the market reaction is just going to happen in higher trading volume. And as we all know already, the higher the trading volume, the higher the market reaction, the higher the momentum of one particular level, the better the chances that that trading signal is actually going to be successful. All right. So again, as a general rule of the thumb, always favor trading signals that happen off at a horizontal level of support and resistance than those happening off diagonal levels of support and resistance. Okay, again, it's a statistical thing. You will score higher win-loss ratios on the long run if you favor horizontal against diagonal levels of support and resistance, or rather, trading setups happening off horizontal levels of support and resistance than those happening off diagonal levels of support and resistance. So, if you have, and I just want to wrap this up real quickly here, if you have two different trading setups, for example, I don't know, the euro against the American dollar, and another one happening at the same time on the euro against the Japanese yen, for example. All right, euro against the Japanese yen. And one of them is taking place off a horizontal level of support and resistance, and the other one is taking place off a trend line. Always favor, if you have to choose one, all right, if you want to go for just one of them, all right, in order to, not overexpose your trading account to euros, all right, you don't want to trade, as a general rule of the thumb, you don't want to take multiple simultaneous trades involving currency pairs on the related to the same currency, in this case the euro. Okay, you usually don't want to do that. Okay, you want to diversify your risk. So if you take one trade on the euro against the American dollar, you may want to pass on any upcoming trade that may happen on any other euro cross or any other American dollar cross. All right. So if you have two different trading setups happening simultaneously, always favor the one happening off a horizontal level of support and resistance. Alright, enough about hitting or beating that horse. Let's move on with the presentation. And well, finally, to finalize this particular presentation, I'm just gonna blend these last 2 points because they are mostly related to the same thing. Be selective with your setups, and you're gonna see why on the very upcoming video. We are gonna be talking about that specific point, and if you don't see it, it's just not there. I'm talking about levels of support and resistance, obviously. If upon opening your any particular forex chart for any particular currency pair on any particular time frame, if you do not see the levels of support, the significant levels of support and resistance within the first 10 or 20 seconds, then it means that they are just not there, or whatever level of support and resistance there may be, it's just not going to be as significant. Remember that setup I showed you guys before about 5 minutes ago on the euro against the Japanese yen weekly time frame, where we identified a nicely clean-cut range with easily identifiable range boundaries, the resistance boundary on the upside and the support boundary on the downside, or to the downside. Do you remember that one? Well, I am sure anyone who's remotely familiar with support and resistance could define those two key levels within, what, 10 seconds? 20 seconds? You don't really need more than that, okay? The most beautiful and the most accurate and the most significant levels of support and resistance, meaning the levels of support and resistance you actually want to trade off, well, those ones, they stand out of your chart like this fast. All right, those are the most significant ones. Those are the ones that most traders around the world are going to be locating their trading volume around, and therefore those are the ones that are going to give you the setups, the opportunities with a higher quality degree, with a higher degree of quality, all right, or with a lower degree of risk. All right, so again, if you need to stare into your chart for more than that, 3-4 minutes, drawing dozens of lines and etc., then the trading opportunity is just not there. All right, you need to appreciate, or you need to I would say appreciate the beauty of a trading setup, the simplicity of a trading setup. Those ones are the ones that, trust me, in the long term are going to carry better results in your trading. All right, so you need to be selective and only pick those charts that gives us those sharp levels of support and resistance in order to base our setups, our trading opportunities around those charts. Okay, and again, I'm going to be talking about that on the about this particular point on the next video. Now, guys, please write down these 10 commandments on a piece of paper, okay, on a sticker, and stick it next to your monitor. And next time you draw your key levels of support and resistance on your chart, please go through this little list. All right, that's gonna take just 1 minute, and if you can fulfill them, it means that that's a valid trade, and you've got the green lights to search for trading opportunities of that particular level and of that particular currency pair. All right, currency pair and time frame. All right, folks, that's all for this video. I'll be waiting for you on the next one. Cheers. Hello there, welcome to a new video. Today we are going to be talking about the weekend market analysis, or what I personally call the weekend market analysis. Now, what is it? Well, the weekend market analysis is basically an exercise that obviously you conduct over the weekends. I personally do it on Sunday mornings. That's just my personal preference, but obviously you are very welcome to do it at any time of the week. Like I said, I personally do it over the weekends because the markets are closed. There is no rush, no stress. You cannot take any entry or exit any trade or modify any positions. Like I said, the markets are closed, so you've got plenty of time to sit at your trading station, relax a little bit and analyze the different currency pairs, the different charts, in a quiet fashion. All right, again, no rush, no stress. This weekend market analysis, the point of this exercise is to draw the key levels of support and resistance on all the different currency pairs on the daily, weekly, and monthly time frame. The idea here is to have everything ready, so whenever the market kicks off on Monday, actually Sunday evening, whenever the forex markets open up for the week, well, you don't have to conduct any further analysis. You've already determined the levels at which you want to trade, and then you just need 20 minutes on Monday, 20 minutes on Tuesday, 20 minutes on Wednesday, no more than that, just a few minutes, take a quick look. Since you already know at what levels you want to trade, it's just a matter of every day sitting for a few minutes, 10, 15, 20 minutes, sit at your trading station, check whether any of the different currency pairs have already hit those predefined levels that you already, again, predefined over the weekend. And if so, well, then you decide whether to take a trade or not, as per the trading patterns we are going to see on a future video. All right, but at any rate, the idea here is to minimize the time you need to spend on a daily basis in front of your charts. Again, and the only thing you need to do here is to, on Sunday morning or at any other time of your choice, sit at your trading station for 30 minutes, 40 minutes. That's just once a week, and you are done with it. That's all you need to do throughout the week. Now, what currency pairs should you follow? Meaning, what currency pairs should you conduct this weekend market analysis exercise on? Well, I personally tried all major 28 currency pairs. Right? The major currencies in the world are, the non-exotic currency pairs, the most heavily traded currencies in the world are the American dollar, the euro, the sterling pound, the Swiss franc, the Japanese yen, the Canadian dollar, the Australian dollar, and the New Zealand dollar. All right, those are the most heavily traded currencies in the world. Now, so what currency pairs should you try? Well, just simply cross these 8 major currencies. You have the euro against the American dollar, the sterling pound against, for example, let's begin with the American dollar. All right, well, you get all the crosses: euro against the American dollar, sterling pound against the American dollar, American dollar against the Swiss franc, American dollar against the Japanese yen, American dollar against the Canadian dollar, and so on and so forth. Then euro against the American dollar, euro against the sterling pound, euro against the Swiss franc, euro against the Japanese yen, etc., etc. Once you've done all the different combinations, you will see that as a result you get 28 pairs. All right, 28 major pairs, which are the ones that I personally tried. All right, again, I don't trade exotic stuff such as the Hong Kong dollar, the Mexican peso. I don't do none of that. All right, just the 28 major currency pairs. Now, your broker may not offer all those 28 pairs. There are some of them, some currency pairs that are not so common, such as, for example, the sterling pound against the New Zealand dollar. Not all the brokers offer that one, and therefore the spread on that one is a little bit, actually, quite more expensive. But again, please mind that even if the spread is 15, 18 pips, all right, if you're shooting for 250 pips per position, you can go ahead and pay 18 pips, 15 pips on that currency pair. And at any rate, that's entirely up to you, all right? Whether you want to trade that one or not, and obviously depending on whether your broker does offer that one or not. Also, the euro against the New Zealand dollar, that's another expensive one. It's about 10 pips, all right, depending on your currency pair, on your forex broker. And again, not all the forex brokers offer that one. All right. Under this video, there is a link to my recommended forex broker. It's the broker that I like to. It's a broker that I'm fond of. I've traded live through them, and I've never had any problems actually. Their platform is rock solid. Their spreads are pretty tight, pretty competitive. It's a solid broker. It's a well-established broker. Anyway, just check the link under this video and download their free demo platform, so you can test the waters, see whether you like them or not, etc., etc. At any rate, like I say, that's just my recommendation, but obviously you can trade through any type of broker you wish. Now, my recommendation as well is to not settle for anything under 21, 22 pairs. All right, you need options here, guys. Please mind that you are trading of the long-term charts. So if your broker only offers like 16 pairs or something like that, well, you are actually going to give up on quite a number of trading opportunities. At no rate, trade less or follow less or trade through a broker offering less than 21, 22 currency pairs. The more, the merrier. Again, more trading options means more trading opportunities, which means more potential profits at the end of the month. All right. Now, since I do understand that conducting your weekend market analysis exercise may not be that intuitive, that easy to follow, what I am going to do is I'm going to conduct my own weekend market analysis on my own trading platform, and I'm gonna record everything in real time. All right, I want you guys to see what I do myself firsthand, so you can see how I go about doing my own analysis on the longer time frames. So next time you do it yourself on your own chart, well, you know how to conduct this little exercise. All right. Now this is going to take a little bit of time. Again, I mean, 28 currency pairs. It takes a little bit of time. All right. And I'm going to be explaining the whole process through. So do not be surprised if this video is over around 30 minutes, 40 minutes long. I know that's going to be a little bit of a pain, but please bear with me, all right? Just this time, bear with me. It's going to be a good exercise for you, okay? And you are going to get, again, you're going to get a first-hand knowledge of, just like watching over my shoulder, all right? Anyway, without any further delay, let's get started. Okay, you are now looking into my own forex charting platform. As you can see, I have a number of small chart windows. Actually, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 20. 1, 2, 3, 4, 5, 6, 7, 8. 28 major crosses. All right, so I have a small chart, a small mini window for each of the different charts, okay, or each of the different 28 major currency pairs. Now, what I'm going to do, if I was to conduct my weekend market analysis, I would simply go through each of them, all right, go into the monthly, into the weekly, and into the daily time frame, and I would begin, drawing key levels of support and resistance, maybe some trend lines, etc., etc., just to see at what levels I want to be trading, or I want to be searching for trading opportunities on the upcoming week. Once you get the hang of it, trust me if I say that it should not take more than 30 minutes, maybe 30 to 40 minutes, to go through all of them, all right? But if I am to explain now while recording this video each single setup, probably this video would be like 2 hours long, all right, if I was to analyze all 28 of them. So what I'm going to do is I'm going to simply pick 8 or 10 random charts. So you see me, you follow me while I analyze those 8, 10 different charts. Again, I do this process throughout the the entire combination, the entire 28 currency pairs. But again, I don't want you guys to be sitting and watching this video for like 2 hours, all right? So we are just going to pick, again, 8 to 10 currency pairs, all right? And we are going to analyze them together. Okay, let's get going. Let's begin, for example, with the cable, all right? The cable, sorry, it's a forex lingo for the sterling pound against the American dollar. Let's begin. I like to begin always with the longer time frame, the monthly time frame, just to take a quick look what I see on my chart. Well, let me expand that out. And then I'm just going to begin drawing some lines. Now, for the monthly time frame, I like to draw my lines in pink color. All right, pink color. I like to color each different time frame or lines coming from different time frames just to know, just to have a visual aspect of where that line may come from. Right? If I take a quick look into a chart and I see a pink line, then I know that that line comes from the monthly time frame. So, well, we have obviously a trend line on, belonging to this uptrend, but that's obviously broken quite a while ago, all right? And so I can easily take that off. Now, what other levels of horizontal levels of support and resistance do I see here? We see that one. Obviously, we have that one there, all right, which is a double level of support. Okay, I'm gonna mark them both. But at any rate, price is really far away, okay? It's really far away from either of them. So, since I like to keep my charts clean, for the time being, I'm just going to take it off. All right, I'm just going to take this one off. Later on, I'll be able to, I can always redraw it. But for the time being, it's going to take quite a long time for price to come back down here or to come back up there. So, no need to draw them for the time being. We also have this swing point there, all right? Former support broken. And now it seems to be working as resistance. Do you see that? Alright, so we are going to mark that one indeed. Price has actually already reacted off that one, okay? You see that? Former level of support, once broken and retested from the other way around, meaning from below, is now working as resistance. So, what we have here also probably is some sort of Fibonacci retracements. Price, the retracement falling between the 38 and the 61 area, so that's okay. Now I can take that off knowing that the retracement has indeed come within Fibonacci retracement areas. And well, that's about it. I don't really see anything more, anything else to analyze here on the monthly time frame. Just that one there. That's a key reference level on this chart. It's working as resistance, so we have resistance above, right? Price is already bouncing off that resistance level, so the bias on this long-term chart is obviously to the downside. Not only we've broken through, not only first of all we broke through that trend line a long time ago, now we broke through this level of support, and now that's been retested, price is bouncing already to the downside. So the bias from the long-term level of, from a long-term perspective, is to the downside. As long as this level holds price below the 170 level, all right? That's the 170 level in there. As long price remains below the 170 level, the bias is going to be to the downside. All right, that's it for the monthly time frame. Let's now look into the weekly time frame. All right. So what do I see here? Well, this is the retracement I was talking about before. Price retesting that level, and from there we've sort of began moving sideways, haven't we? In fact, what I am seeing here is some sort of a triangle. Do you guys see this triangle here? Now I am going to mark that triangle in blue. Okay, my favorite color for the weekly time frame is blue color. So whenever I find a blue line, I know that that comes from the weekly time frame. Right? That's just something that I've always done for the years, and it's always worked me well. It's some sort of a visual reference now. Alright, no need really to zoom into the daily time frame because we are going to see exactly the same thing. Price is entrapped. Let me zoom out a little bit. Price is entrapped within this no man's land on the weekly time frame. So I don't really want to be zooming into the daily time frame to search for any trading opportunity in the daily time frame, because price is already entrapped within a ranging price action on the weekly. All right, so no need to zoom into the daily time frame in this case. So courses of action here. Well, we can either get a breakout to the upside or a breakout to the downside. As we've already established on previous videos, I don't want to trade within no man's land. All right, you don't want to trade in areas with heavy traffic congestion. All right. Well, this area is heavily congested, and I want to wait for price to break free of that area. Now, if we get a breakout to the upside, will I want to try that? Well, since I have resistance coming from the monthly time frame, you see that's why I color code my lines. I have a pink line in there. I know, okay, that any breakout to the upside is gonna meet monthly resistance. Again, just above breakout points. I don't want to be taking any breakout to the upside unless that breakout or that trading signal happens somewhere in here. All right, unless we break that trend line break, that monthly resistance to the upside, I am not willing to take any long entry. One of the key basic principles of forex trading, guys, remember from that previous video, you don't want to sell against resistance. Okay, you don't want to sell against resistance, you don't want to buy against support. So I am not going to I apologize for that. You don't want to buy sorry about that. You don't want to buy against resistance. Okay, since we have resistance there, a resistance that's already confirmed, price has already bounced off that level. I don't want to buy against resistance at any rate. Okay, so my desired direction for the breakout is obviously going to be to the downside. I don't have any further level of resistance, of support anywhere farther down below. Since we could spot that line on the monthly time frame, I'm gonna mark this in pink. All right, we can easily spot that on the monthly time frame, so I'm going to mark that in pink. Now, again, if we get a breakout to the downside, price is free to move all these, all the way down from breakout points all the way down. Do you see that how we have no further support anywhere below here? No further support, guys, no further support. This is a highway free of traffic. So if we get a breakout to the downside, I am going to be all over the sterling pound against the American dollar on the weekly time frame, searching for further short opportunities here. Unless we get a breakout to the upside, a breakout beyond this horizontal pink line, I am not going to be searching here for any long opportunity. Only long opportunities in here. Okay, so there goes a little note on my notepad. I know that I want to be searching for short opportunities here. What I'm going to do is I am going to be following any potential short opportunity, any potential breakout opportunity of that triangle boundary. Okay, of that triangle boundary to the downside. That's about it. Let me minimize this once again, and let's move on with the next trading pair. Alright, next one up, any random chart, this one for example, the Canadian dollar against the Japanese yen. Let me expand that out. Let's begin with the monthly time frame as usual. Let me zoom out just to take a look at the to the longer time perspective. Okay, this is the monthly time frame. Well, that level not really, already got broken there, then broken there. So that's an old level. No need to draw that. How about this one? Yeah, that one we do have a long-term level of support in there. All right. Long-term level of support on the monthly time frame. We have another one down here, don't we? But anyway, that's way too far from price. We also have another one there, and we also have another one there, right? Actually, if I zoom in a little bit more, I can see how price found resistance, resistance, resistance once again before the actual breakout. Okay, so I am going to mark that one as well, just in case price goes up to retest that level once again. That's about it, really. Any trend line here? We have a steep trend line there, but it's already broken. That's about it. That's about it for the monthly time frame. As you can see, it doesn't take more than 1 or 2 minutes per time frame. Now, if I zoom into the weekly time frame, what do I see? Well, whoops, sorry, I messed that up. So what do we see here on the weekly time frame? Well, I am seeing some sort of a range here. Range. You guys see that range there? All right, range, range. Price in the middle of a sideways range, and I'm gonna mark this as usual in blue. In blue. And now another one, the resistance point for the channel bottom. We also have a little bit of support in there. All right, actually we have a little bit of support in there as well. So even though it's not exactly a very sharp level of support, all right, that one, and that one, more or less they all fall in line. So support below current market price, resistance just above current market price. So price is been obviously zigzagging, and right now it's in the middle of a no man's land. No need to be searching for trading opportunities, no need to take any note at this point. I don't like to trade whenever price is in the middle, in the mid area of any of a range. I don't like that unless price comes all the way up here or down here. For the time being, I am not going to be taking a trade on the Canadian dollar against the Japanese yen. All right. On a previous video, I was actually mentioning that you need to be very selective with your chart, with your trading setups. Okay, with the opportunities you are willing to take. Well, that's exactly what I mean. You are not supposed, or you cannot expect, to find profitable trading opportunities in every single currency pair you analyze, on every single chart. Okay, most of them are just not going to be at the right junction of the chart. That's the job of a trader, right? The job of a trader is to be extraordinarily selective, to obviously to analyze all the different charts and then cherry pick 2 or 3 that that are looking the most promising ones. All right, and those are the ones where you are going to try to find your trading opportunities on. Most of the charts that you will analyze are just going to be a scratch setup, at least for the time being. Again, until price reach either this area here, this and that area there, and we get some type of breakout, and then if we get a breakout of this level, once price hits either this area or down here, at any rate, key decision taking levels. As it is right now, price is in the middle of range, very far away from either this area or that area, and also obviously away from this area and that area. Those are the two decent levels of support and resistance, the decent key levels in this chart. I don't find anything else there. So for the time being, as long as price remains in this area of the range, I'm just gonna pass on the Canadian dollar against the Japanese yen. I'm not gonna even look at this chart until the next weekend market analysis. Okay? Obviously that's gonna happen next week, or next weekend to be more accurate. All right, let me minimize this thing. Let me put it back on its place, and now I take a quick note on my notepad. Canadian dollar against the Japanese yen, it's a no-go for the rest of the week. Do you see how we are gonna save up time over the next week by conducting this weekend market analysis exercise? I know that I don't need to waste one single minute on this particular currency pair. Alright, next one up, I don't know, for example this one, Australian dollar against the Japanese yen, a weekly time frame, and let's expand that out. Just a second guys, let me expand that chart. Let's take a look. Let's begin as usual with the monthly time frame. Well, we can see obviously a former trend line, but that one got broken a long time ago. No need to draw that. We also have that level there and that level there, right? The extreme of this previous, first of all up move and then down move. Actually, this level falls in line with this one there, right? So it's a double, oops, sorry about that. It's a double level of support. Key one, very important level of support because it's happening on the longer time frames. That's a level of support you want to mark in your chart. All right, you mark that up in your chart. Also, I'm finding support of this area here. You see these 3 long wicks to the downside, right? Both of the 3 of them bottoming out at around this area. That area is former support, all right, former support, and now maybe working as resistance. Let's actually use a horizontal line, and there it is, bingo. Price is already reacting. It's already reacting, already finding support right to the peak of a former level of support. Okay, so now former support, once broken and retested from below, is now working as resistance, and in fact we are already getting the price reaction of that level. Let me zoom in a little bit more. There you have it. Do you see guys how it's already bouncing off that level, how it's already giving us that reaction, okay, that market reaction of that level? So very important find here. We are getting a nice clue with this down move. All right, probably if we use some Fibonacci retracements, uh, yes, of the entire move down, we can see how the retracement is falling within the 38 and the 61 Fibonacci retracement. So any bounce that's located within this area, all right, any bounce such as in there, that bounce there, that may be located within the Fibonacci retracement levels, is, you know, an optimal area searching for a bounce trade, okay, meaning a reversal formation. All right. That's what's going on the on the monthly time frame. Let's see at let's see what's panning out on the weekly here. Let me zoom out a little bit now. Well, this is the full retracement move, hitting right to the peep that level. Let's see. Well, we have some trend lines here, right? Let me actually mark that in blue since we are now on the weekly time frame. Okay, we have one trend line there that got broken, another trend line there also got broken, another trend line there that's been more or less retested right now. I'm not really fond of this trend line. It keeps on getting broken, you know, keeps on getting broken. This one, then this one, sorry. This one here got broken. That one there got broken. That one there got broken. That one there, it's now being retested. We also have, if you notice, some inner trend line here. Right there. Do you guys see this trend line there? Alright. Working as support quite a few times, diagonal level of support. Like I say, actually some sort of a channel. Alright. Some sort of a channel there. Alright. Price certainly zigzagging up and down within this area. What I would like certainly is to see a breakout to the downside. But if you remember, on a previous video I mentioned that one of the most important things is to pick the right time frame for a particular trading setup. Okay, do you remember, guys, that? Well, that meant that you need to trade, or you need to search for trading opportunities in the same time frame where price is already reacting from a level of support and resistance. That means that what market reaction are we getting right now? Are we getting a reaction of a weekly line, or are we getting a reaction of a monthly or a daily line? Well, the truth is that we are getting a reaction of a monthly line, right? This is the former level of support. Now we are getting that market reaction already. That means that I should not be zooming into the weekly time frame to search for this trading opportunity. I should be sticking to the monthly time frame for, to search for my favorite price patterns of that level right now. Right? Obviously I need to wait for this candle to close before searching for those patterns. Once the month comes to an end, I know that I may get a trading opportunity. But at the end of the day, what I want to stress here is that I should not be zooming into either the weekly or the daily time frame, because the key level on this chart is this line. This is the line that's going to determine whether I want to search for short opportunities as long as price is below this level, or for long opportunities if price breaks above this level. Since we are getting the bounce, this price is already reacting to the downside, I want to be searching for short opportunities. Alright, and I want to stay on the monthly time frame because we are getting a bounce of a pink line. Alright, meaning a monthly line. Alright, so again, I'm glad I found this example to pinpoint the importance of picking the right time frame for each particular setup. Alright, okay, let's minimize that. I'm gonna take another quick note on my notepad, knowing, or stating that at the end of the month I want to come back into the Australian dollar against the Japanese yen, searching for short price patterns. Okay, next one up, euro against the Swiss franc, for example. Let's expand it out. Monthly time frame. Let's zoom out. Okay, first of all, support. So there goes a horizontal line, isn't it? Trading properties, pink color, monthly time frame. Alright. What else do we have here? Let's zoom in once again. We have former level of support there. Well, we have that one there, but it's far too far away from price. So support there, and seems like it worked as resistance in there, didn't it? So there goes another pink line. Again, once you get the hang of this exercise, guys, this is gonna take just 20 minutes for you in one weekend, so not a big deal. Well, it seems like price had been zigzagging down. All right, found resistance. All right. Of that former support, and the bounce is already gone. The bounce is already gone. The move is already gone. I'm afraid I'm a little bit too late for this party. Now, that trend line, do you guys see this trend line here? Actually, we may see that one better on the whoops, sorry about that. We must see that better on the weekly time frame. This trend line there got broken quite a while ago, so no need to draw that anymore. We have a level of support in there with these, multiple bottoms around that level. So there goes another horizontal line. As you guys know, I favor horizontal lines over trend lines, just my personal choice. I believe they are more significant and more accurate. We also have some level of resistance in there. A little bit inaccurate, to be honest, but anyway. And another one there, another level of support also on the weekly. Alright, there we are, and obviously that one that we already marked on the monthly time frame. Let me study this. Well, we also have some sort of an ugly trend line here. Let me actually use a trend line. An ugly trend line there that got broken. Then that one, alright, linking this one and that one, but also got messed up there. So we will need to readjust that one there, but it's just too ugly, too inaccurate. It gets broken over and over and over, so I'm just not even going to mark it. I'm not seeing anything that I like here, guys, on this particular chart. Too many different lines, alright. Some of them coming from the monthly Some of them coming from the monthly time frame. Some of them some others from the weekly. We have support down here, resistance up there with this former level. But then if we get a breakout of that one, we also have support not far below from breakout point. All right. I don't really like what I am seeing here. Moreover, this key level, right? Price seems like it's not really, we are not getting a clean cut action of that level. Multiple swings up and down, all right? So we could even take that one off. I don't know. I'm just not liking this one. Okay, I'm gonna be selective, and I'm sure I'm gonna find trading opportunities on better looking trading opportunities on any other currency pair. So the euro against the Swiss franc, I am going to give it a miss. All right, next one up. For example, this one, the euro against the sterling pound. Let's expand that up. Monthly time frame. What do we see here? Euro against the sterling pound monthly time frame. Well, we have a lower swing high and a higher swing low. Do you guys see that? All right, how the swinging points in price are kind of compressing. When this type of thing happens on the market, means congestion, okay, sideways price action, and more often than not, you can draw a triangular formation on your chart. All right. You guys see that? Let's mark that in pink, since we are in the monthly time frame. There we are. All right, that's our triangular formation, and in fact, we are seeing the breakout of that triangle now to the downside. So if I was to determine, okay, or to pinpoint any type of bias right now on this chart, it would be to the downside. I would favor short entries, just because we are finding or spotting on the longer time frames a breakout on the monthly time frame again. A breakout to the downside. So my bias, if I am to find any trading opportunity on the weekly, on the daily, it would be, or I would favor short opportunities. All right, just because I have that bias, that again on a previous video I mentioned that it's so important. You need to have a bias. All right. That doesn't mean a trend, guys. It doesn't mean a trend. As you can see, we have no trend here. But the breakout, at least from that congestion area, okay, this triangular area is happening to the is happening down. All right. Now let's go into the weekly time frame. Okay, this is the weekly time frame. Let me redefine my lines. You know, just to be more accurate with them. You want to be accurate with your trend line, guys. Well, actually, you know what? I am going to recolor these trend lines in blue because you can easily spot this this triangular formation on the daily, on the weekly time frame, can you? We are now looking, as you can see, into the weekly time frame, and well, we can certainly pinpoint that triangular formation on the weekly time frame. So there it goes. It's marked in pink. In blue. All right. Now, daily time frame. Let me squeeze that in a little bit. What am I seeing here? Well, I am seeing a triple level of former support. You see that, guys? I'm gonna mark it in red. I color my lines, my daily lines with red color. Again, just a personal preference of mine. You can choose any color of your choice. I'm also seeing some sort of a trend line there. All right. Oops, sorry. Well, somewhere like that. Okay. Some sort of a downtrend in there, but not really significant since we have this level before. So it's closer to the current market price. So anyway, since the bias is to the downside on this particular chart, what would I like to see? Well, this is the key reference point as of right now in this currency pair. All right. So what would I like to see? Well, I like price to retest or to retrace back up to retest that level right there. And from there, since again my bias is still to the short side, I would like to see a reversal formation around that area on the daily time frame. Okay, I hope that was clear. What's my key reference level here? That line. What's my bias? As we saw on the weekly, even on the monthly time frame, breakout to the downside. So my bias is to the downside, and therefore I favor short opportunities. What's my next level of support ahead of my entry point? Well, the next swing point, in this case on the weekly time frame, is down there, right? Down there. That's my next level of support. So you can see plenty of area here, plenty of, it's one of those highways free of traffic that I was mentioning before. So plenty of free space there to search for short opportunities. And finally, on the daily time frame, our key reference is that one. Okay, course of action. Since this is the key level, I like price to come back, retest that level, and here search for reversal opportunities in order to, well, search for some sort of a new whole swing to the downside, aiming for, well, this down line that I mentioned before on the weekly time frame. All right, that line there. Okay, guys, that's my trade plan. There goes another note on my notepad. Wait for pullback on the daily time frame to retest this line here, and then search for short opportunities from there. There goes another line into my beloved notepad. All right, are we ready for another currency pair? Yes, we are. That's the spirit. All right, sterling pound against the Australian dollar. Weekly time frame, but as usual, let's start with the monthly time frame. Okay, well, quite a nice downtrend, isn't it? Let's zoom out a little bit more just to see. Even more so, yeah, this is the final level of support in there. As it's always a good idea to zoom out just to see what are the last levels of support and resistance that got broken. That's a key. That's the last key level. All right, there we are. Now, as we can see, it got broken, so we have free traffic, free area plenty of breathing room to the downside. All right. What else? What else do I see? Well, some sort of a resistance level. All right, there and there, which I am going to mark right now. Anyway, no need. Price is way too far away from that level. Price is never going to retrace there anytime soon. So, let's forget about it. Another level of support in there. You see, few bars bottoming out there and again there. All right. So let's mark that up. There we are. Just a second. Let's be accurate with the lines. There we are. All right. We saw a breakout of that line that came from a long time ago on the monthly time frame. So we got a breakout. So bias, where is our bias? To the downside once again, because we are breaking through support. All right, we are breaking through long-term support. The bias is still to the downside. Now, what do we see on the weekly time frame? All right, this is the weekly time frame. Well, we see some sort of a range, don't we? Range there, right? Support, support, resistance, resistance. Price moving within a within a horizontal price action, with a horizontal channel. And since we are on the weekly, we are going to mark that in blue. And now I'm just going to copy that line in the bottom to the bottom of the chart, to the range, sorry. So there we are. All right. Price action, range in price action, courses of action. Well, I like to see a breakout to the downside. All right, I'd like to see a breakout. Sorry, actually down here. I'd like to see a breakout to the downside, since as we already saw on the monthly time frame, we are breaking through that long-term level of support. Okay, so the bias is to the downside, and therefore I'd like to continue seeing a breakout to the downside. If we get a breakout to the upside, is it still tradable? Yes, it is. In theory, it is. Just because you have a bias, it doesn't mean that you should trade in the direction of the bias. Okay, that's just the most natural direction, all right, to trade. But it doesn't have to be the only option here. The problem is that if we get a breakout to the upside, a breakout of this range, whoops. A breakout to the upside of that range, we are going to be facing long-term, that long-term line, right? Again, coming from the monthly time frame, right? Coming from the monthly time frame. So, any breakout to the upside there is going to be facing resistance just ahead of breakout point. Okay, that's not a good idea, guys. Remember, you don't want to buy against resistance. You don't want to sell against support. If you buy that breakout there, you are going to be clashing onto long-term resistance, and therefore price may actually give us a reversal, right? A reversal of that level, and therefore, well, our long position will certainly turn into a loser. Okay, so courses of action. If we get a breakout, obviously I'm going to be searching for breakouts there, for short opportunities on the weekly time frame. Why? Because the lines that I am trading here are both coming from the weekly time frame. So if I get a breakout, I'm going to be searching for continuation moves, okay, continuation moves on the weekly time frame. If we get a breakout to the upside, I will have to zoom into the monthly time frame and search for reversal formations of this line up there, right? I am not going to trade continuation or breakout moves here of the weekly time frame. Okay, I am only going to be searching for short breakouts of the weekly time frame, because I don't want to be trading long opportunities of or against that monthly line, right? So if eventually the breakout does happen to the upside, I will have to zoom into the monthly time frame and search for trading patterns again of the monthly, because we are going to be facing monthly resistance. Is that clear, guys? I know I keep on stressing on this, but it really is important that you understand that picking up the right time frame for every trading opportunity is crucial, right? So, short opportunities on the weekly time frame or short opportunities of this line on the monthly time frame. That's my trade plan here, and well, those are the two lines, those are the two notes that I'm going to take into my trading notepad. All right, let's squeeze that in once again, and let's keep on moving with the next chart. All right, next one up, I don't know, this one, for example, New Zealand dollar against the Swiss C. All right, New Zealand dollar against the Swiss franc. Monthly time frame as usual. Let me remove this dot there on my chart. Oops, another one there. Let's remove it. Okay, what do I see? Well, swing high, swing low, price way too far away from there, so we should have a Fibonacci retracement there. That should fall within Fibonacci retracement area. That's correct. Between the 38 and the 61, this is an ideal location anywhere in here to search for bounce. Bounces in the direction of the previous swing. Swing down, pull back within Fibonacci retracement, full swing down again to the downside. That's what's to be expected. But let's not rush into things. What else do I see? Another key level in here is this one there, right? Double level of support. Even though it's not the most accurate level of support, it's more or less of an area, but nonetheless, it's worth marking in your chart, right? All right, let's mark it in pink. Monthly time frame, monthly line goes in pink. That's about it, guys, really. Any trend line here, any type of trend line? We have a trend line there that got broken somewhere in there a long time ago. Another trend line there, also broken. No trend line to be, no significant trend line here. Now, that's about it for the monthly time frame. Let's go into the weekly. All right, into the weekly time frame. Okay, let's see if we have a trend line. Let's mark it in blue first of all. Okay, we have that trend line there, got broken. This outer trend line, but it's not really that important since price has not yet taken out the previous swing high. So that trend line is kind of a fake trend line, or at least a trend line that has not been confirmed yet. Quite frankly, price is flapping about key decision taking level. Remember that monthly line that we just marked on the monthly time frame? Okay, this one in pink. Do you see how on the weekly time frame what we see is price simply flapping sideways? We have resistance there and resistance there. We could probably draw a horizontal line. Actually, let's do it. There we are. Right? Resistance, resistance. Swing low there, okay, on the weekly time frame. Price flapping not only within a no man's land, okay, no directional bias here, but also we are not really getting any clear market reaction of that pink line, of that monthly line. Means that the market as a whole is still undecided whether it wants to break through and keep on pushing to the upside with a continuation move, all right, move, congestion, continuation, or in the other hand it's going to give us a reversal, move, congestion, reversal. At the time being, it's waiting time, guys, waiting time. We cannot trade right now. It's price is in the middle area of a no man's land, not a good idea. And again, not only that, price is simply flapping sideways. Let's go back into the monthly time frame since this is a monthly line. Let me zoom in. Again, remember, you need to analyze price action around a monthly line in the monthly time frame. Don't mix time frame, guys. This is important. So, price goes up, price goes down, price goes up, and now it seems like it's coming back down once again. Unclear price action around key decision taking level. For the time being, I'm going to wait it out, guys. I am going to wait it out on this one. If we get a breakout to the upside, then I'll be searching for long entries. If we get a breakout to the downside, okay, of that weekly line, okay, that line in blue, then I'll be searching for short opportunities there. As long as price is within this no man's land, as long as price is still not giving me any clear price action, price reaction of that monthly line, I am going to pass, at least for the next week. I will take a second look next week, okay, over the next weekend market analysis exercise on this currency pair as usual. But at least for the next week, I'm not gonna be tracking the New Zealand dollar against the Swiss franc, and therefore no note is going into my notepad for the time being on this currency pair. Okay. All right. I don't know, the euro, for example. Euro against the American dollar. Let me expand it out as usual, and let's look into the monthly time frame. Okay. Some trend line there that got broken. Some outer trend line there as well. Let me actually mark that trend line. Okay, pink color, there it is. Now, horizontal levels of support and resistance, that one there and that one there. All right, I'm just gonna mark the last one, the last there. Once price breaks, if it breaks to the upside, I will mark that one, but for the time being I like to keep my charts clean. Then we have another one there. Okay, those are the only ones that I'm gonna mark. Actually, I'm not gonna mark this one because before hitting this one, price needs to break the trend line. All right, so if it breaks the trend line, then I will take off the trend line and mark this one. For the time being, I'm just gonna keep the trend line there. Anyway, this trend line is rather weak. Okay, as usual, as you can see, this last swing did not continue with the trend, okay, because price didn't push above the previous swing high, and therefore this is a fake or unconfirmed trend line. The last confirmed trend line that we have is this one, because this swing did indeed take out the previous swing high. All right, did you see that? It did indeed take out that previous swing high, and this is the last swing in that former uptrend. This last swing, okay, the swing that I am connecting with the beginning of the trend as per this trend line has not confirmed as to be continuing the up momentum, right? And therefore this trend has not been confirmed. That means that it's a very weak trend line. All right, weak trend line, guys. Okay, that's about it really. I don't see anything else on the on the monthly time frame. Let's check now the weekly. Support, resistance, some sort of a resistance area there. We've already marked that on the weekly time frame, but actually since I can see that better on the weekly, I am going to mark it in blue. All right, I'm gonna mark that one in blue. All right, there we are. That one, that's about it really, guys. We have some sort of a trend line there as well on the weekly time frame. Do you see that? Let me zoom in a little bit more. All right, do you guys see that? Former trend. All right, former trend broken. Okay, and well, price keeps on pushing to the downside. So market bias. Remember, you always want to have a clear bias on your mind, at least to structure your work frame, right, or your workflow as far as analyzing your charts. The bias is to the downside right now on the euro against the American dollar, right? That's about it really. As per the weekly time frame, I don't see any significant, again, that one there, but the trend line is before. So let's move on to the daily time frame. Zoom out a little bit more. Okay, there we are. That's the breakout that I was mentioning before. Price gave us one swing, one pullback, and then it's giving us the second swing. Well, course of action, wait for another pullback, right? Just wait for another pullback. Let's draw the daily lines. That one there, the outer trend line on this last downtrend. That one there, isn't it? That swing low as well. Okay, and that's it. Course of action here. Well, course of action, wait for a pullback to either the swing low or the trend line, right? That trend line there. Obviously, since I like horizontal levels, or I believe horizontal levels are more significant than diagonal levels, I'd like to see a retracement back to this area there, right? Once we see a retracement, also please note how it would fall also within Fibonacci territory. if I expand my Fibonacci's, actually it would touch right to the pip the 50% Fibonacci retracement, but at any rate is between the 38 and the 61, so that would be okay, the ideal location to search for a retracement, and from there a bounce to the downside. Okay. And there it is. That's my trade, my plan of action. For the time being, I need to wait until I see a little bit of a pullback. Okay, the ideal location, again, this area. Since this is a daily time frame line, I would search for my trading patterns. Okay, my trading signals to come off the daily time frame. All right. Again, very easy to understand. If your line is in red, right, the line you are getting a reaction of is in red, simply zoom into that particular time frame, in this case the daily time frame, and that's where you would want to search for your trading opportunity, for your trading price pattern. All right. Okay, let's put this back in place. Taking a quick note on my notepad as per that red line on the daily time frame on the euro against the American dollar, this one there. All right, and that's where I want to be searching for my trading opportunities in order to sell off that level. And well, I reckon that's pretty much it, guys. I reckon you get the idea of how I conduct my market weekend analysis exercise, don't you? I mean, I could keep on going analyzing all the different charts, but you are probably bored out of your mind. And anyway, this video would last over an hour and a half, and no point to stretch it any farther. I mean, it's a pretty mechanical exercise. Just pull out the chart, draw your horizontal levels of support and resistance, color code those lines depending on what time frame they belong to, and again, be very selective. All right, cherry pick only those charts, only those setups that look the best, that have the most easily recognizable levels of support and resistance, key levels where you may find or where you may want to wait for price to hit and then search for price reactions of those levels. Again, be selective, guys. As an average, after having analyzed all the major 28 currency pairs, I usually don't get more than 4, 5 or 6 valid trading opportunities for the upcoming week. All right, again, no more than 4 or 5 per week. That's why you can easily try this system in only 10 or 20 minutes a day, because you are just going to have to take a quick look into 4 or 5 charts every evening, and that's about it. If they've hit your desired level of support and resistance, then you search for your trade. If not, you come back tomorrow. As simple as that. Do you see now how you can easily trade this strategy with just a few minutes a day? All right. All you need to do, the only little part of commitment from your end, is that during the weekends you conduct this weekend market outlook exercise. That's all it takes. And trust me, once you get the hang of it, you are going to be able to conduct all the analysis throughout all 28 major currency pairs in 30, 35, 40 minutes at the most. All right. Okay, guys, that's about it. That's how you prepare your charts over the weekend for the upcoming week. I'll see you in the next video. Bye-bye.